And joining us now on the debate in Irvine, California, Peter Navarro, business professor at the University of California at Irvine and the author of The Coming China Wars. In New York, New York, Ian Bremer, CEO of Eurasia Group and the author of The End of the Free Market. And joining us here in studio, Bernie Wolf, professor of economics and international business at the Schulich School of Business at York University, and Andrea Chun, lawyer and former radio and television talk show host at Fairchild Media, a Chinese language broadcaster here in Canada. It's good of all of you to join us, both here in the studio and in Points Beyond, for our discussion tonight about the reinvention of China's economy. And Ian, to that end, let me start with you. China, of course, spent the last 2.5 decades becoming, in essence, the world's factory, turning out inexpensive mass-produced goods for export. Now we read, see, and hear that that plan may be changing. What's China's new plan?
That plan is changing, and it's changing in part because they recognize if they're going to continue with the economic growth that they desperately need to maintain political stability, they're going to have to change their game plan. The West can't continue to buy the goods that they have from China over the course of the last decades. The strategy is pretty simple, and it's three-pronged. First, it's diversify exports away from just the West, much more to the developing world, much more to Asia. Secondly, it's indigenous innovation, so it means of what you are exporting, keep a lot more of the profits in China. And third, it's diversify to domestic economic growth and domestic economic demand for consumers, where so much of it has been provided by the state of late. None of those things are going to be done overnight, but they are absolutely the highest priorities, and they're consensus priorities of the Chinese government right now, and it's really a sea change in what we're going to see from China.
Well, Andrea, that jibes with some of the other things we're hearing, which is that the Chinese government is not as welcoming to outside, read foreign business interests as they once were. Do you understand that to be the case also?
Well, I do hear a lot on the ground that's to be the case, but let me start by saying the State Council actually announced a formula or a directive, if you will, of how to further utilize foreign investment. That is, this directive that was issued in April of this year clearly states the direction that the central government would like to move in, i.e. move from the two highs, the higher end and high innovation or higher invention, and secondly, how to attract the two I's, investment and the innovation. So there we have it. The policy is right there. And how are they going to do that? It's going to be a question, I guess, of how long and which direction. So some firms actually, or foreign enterprises, have felt that they've been discriminated against or unfairly treated, especially in the latest Chinese stimulus package.
I like that. 2 H's and 2 I's. That's a very good way to remember it. Bernie, can you give us some examples, if you in fact agree that the Chinese have been less welcoming to foreign companies? Can you give us some examples of how that's rolled out?
I wouldn't say that they're less welcoming. It's that they're trying to be more selective and to they've always tried to get technology. It wasn't so much in recent years trying to get foreign capital. It was really they were interested in getting technology. And they've continued to do this, but as they move up now in terms of value added, the technology has to become more and more sophisticated. So, you know, they are still very much interested in the automotive industry, but they're also interested in, you know, fairly high tech. And in fact, it was announced, I think, in a list that was published today that they now have the second fastest computer in China. So they've really moved up in terms of innovation, in terms of being able to be much higher in terms of the kind of technology.
I want to pick up on that and put it to Peter, because the United States government has not been thrilled about China's, here's 2 I's, Indigenous Innovation Program. Can you tell us what that is?
Well, it's part of a broader strategy, Steve, basically to move up and across what we call the value chain. I think what we're talking about here is a change that's already taken place over the last 5 or 6 years. The problem I have with Chinese industrial policy is that it's aimed at stealing or forcing technology transfer. If you're a foreign company, whether you're from Canada or the US, you go over to China, as a condition of entry into the market, you have to do two things. You have to surrender your technology, and even more important, you have to agree to establish research and development facilities right there on domestic soil. So the Chinese strategy is pretty clear. Steal Western technology, make it their own, call it indigenous innovation, through that mercantilist and protectionist practices, and then sell to the rest of the world and create jobs at the expense of everybody else.
If that, Ian, is in fact the way it works over there, why do Western companies agree to, in fact, give up, the family secrets, if you like?
Well, first of all, because China was greenfield for an awful long time. I mean, they may be interested in borrowing Western technology, and they've certainly done quite a bit of that. But when your local competition is nascent or non-existent, you can still make an awful lot of money, even if you can't protect your intellectual property. But what we're now seeing is that state competitors, both state-owned competitors as well as state-supported competitors, are becoming much more powerful. And of course, the one thing that you have in the United States and Canada that you do not have in China is rule of law. So if you have a problem with the fact that something's been stolen or that your contract has been abrogated, you can go scratch in China. And that's a real problem for Western corporations. So a lot of companies have been looking short term. We've seen that all over the place in terms of shareholder support and compensation and the rest. But now, suddenly, they're facing a very different kind of China, much stronger China that's much more competitive. And Western corporations are going to have to find that they have to change their model, or they're going to be forced out. And this is happening in many sectors. The Google versus China fight is only the first of many that we're going to see.
Andrea, you were smiling through that whole answer. How come?
I cannot defend, in all honesty, that there is a rule of law in China, at least not the way that we know of it in the West. They certainly have their own legal system. Intellectual property is protected, at least on the books. Now, of course, we have a problem with enforcement, uniformity, and everything else that we have there. But the indigenous innovation rules that were announced in November of 2009, the Chinese government would argue that they have backtracked, at least compromised, and now have changed a bit of the rules to allow. In the beginning, when it was announced, it said that it had to be made in China. It had to be independent of a foreign enterprise. And now the latest that was announced is that as long as you have the intellectual property that is legally, you could legally use it in China, you may be fine. And that was to bid for a government procurement agreement, which may be worth billions of dollars. But to answer your question, I think, Steve, it's a very difficult and different business environment. But as we have just mentioned here, enterprises are still there. So why are they there? Because they still make some money. And under those circumstances, I think we can see for sure China has actually admittedly openly that they want to learn about intellectual property and then from it, transfer it into their own knowledge. So there you go, you have a transfer. Whether that was paid for, of course, is completely debatable.
Okay, Bernie, follow up?
Yeah, I mean, China is really no different here than Germany was after the war or Japan. There was a lot of stealing of intellectual property, and the same thing is happening now. And as China gets more and more of its own indigenous intellectual property, it's going to have more and more incentive to protect. And that's what we're going to see happening. And in the meantime, companies are hesitant to sort of put the latest stuff in there. At the same time, they have to trade off because it's just such a large market. It's so profitable. They can't afford not to be there.
Okay, Peter, let me play out this scenario with you. And as uncomfortable as this may make you feel, let me make you the head of the government of China for the next couple of minutes here. Yes, you're not in the business of a planned economy anymore. You're far more capitalistic than you ever used to be. The government, however, still controls much of the decision-making apparatus. If you want to move your vast economy from producing low-cost goods into more high-end, high-value products, how do you actually do that?
Well, China basically has a choice. The choice it's made so far is to basically adopt the 18th century mercantilist and protectionist practices, and to basically take everybody's technology, try to seize markets, protect their own markets, and go accordingly. And so far that's worked because they've got an export-driven economy. What you're asking me is to basically give them some advice to try another model here. The other model here is to really embrace free market capitalism and free trade. One of the first things they could do and should do is let their currency float upwards relative to other currencies. That would lower their raw materials costs, their oil costs. It would give Chinese citizens domestic purchasing power and grow the domestic consumption sector. And it would create a lot of less protectionist pressure so people could get along in this world moving forward. What we have now is a freight train hurtling forward where there's going to be conflict. I mean, I wrote the book, The Coming China Wars, because I believe that the Chinese model creates conflict, but they need to kind of turn on a dime and go the other way. Andrea is defending the indefensible. They are stealing technology left and right for their own benefit. It exceeds anything that Germany and Japan ever did, and this is serious for people in Canada and the U.S. who are trying to create jobs here and wealth.
Andrea, are you defending the indefensible here?
Absolutely not. I'm not defending the fact that there's no enforcement of intellectual property laws in China, or practically little or none of it. However, having said that, I think the protectionism that Peter was talking about exists everywhere. We've got Buy America provisions in the stimulus package as well, and China has been accused of that. And we've got in Canada the Investment Canada Act or protected industries as well. So certain foreign investments will have to be vetted by the government. So I think to a certain degree, every country has that type of protectionism that exists. However, having said that,
can I ask Andrea a question here?
Come on, go ahead.
Can I ask Andrea a question, please?
Sure.
Andrea, look, is the scale and scope of Chinese mercantilism protectionism far above every other country on this planet, yes or no?
Yes, to the extent that the growth of the economy has been so rapid. However, as I've said before in the past, the company laws and everything else system has not grown with it. So you've got yourself opening up for 30 years and all of a sudden the growth is exponential. However, the rule of law, the system, the economic system, the education, and everything else has not kept pace, and that is a problem.
Okay, I got to know what of New York City. Let me follow up on that one. Go ahead, Ian.
You got to know, not because I'm defending China on this, but because any other country in the world is a little far-fetched. Russia clearly is worse, frankly, on most of these issues than China. There are two different systems out there, and one of them is becoming much stronger. You have a free market system that's sometimes better regulated, sometimes less well regulated, where private sector corporations are the principal economic actors, where there's fundamental rule of law, where intellectual property is respected. And that's been the world that we've effectively been living in primarily over the last 40 years. Then you have state capitalist economic systems where the state is the primary economic actor. They use markets for ultimately political gain in the absence of rule of law. And there are many countries with that model as well. Russia, Saudi Arabia, China, sort of Venezuela, you go on and on. The problem is that the free market economies right now, after the last 18 months, are under an extraordinary stress. The most successful experiment ever of the free market system, the creation of the Eurozone, under unprecedented pressure right now. And meanwhile, the economy that's doing the best coming out of the global economic crisis is the world's second largest now, fastest major growing, China, a state capitalist economy. And I completely agree that a lot of conflict is coming because ultimately these two systems have a lot of incompatibilities.
Okay, Bernie, you're on.
Yeah, what I wanted to say is that a lot of what Peter says is right, but I don't think Peter is giving enough credit for the way the market works in China. There is pressure for wage increases. Right now, the Honda parts factory in Fusan is on strike.
Where is that?
That's on the coast in China. It's paralyzed two other Honda factories in South China. The workers are demanding a fairly hefty increase in wages. And as the wages go up, China is not going to be able to produce the kinds of things that it produced before for export.
In other words,
it's just not competitive.
The low cost.
Yeah. That's right,
whatever.
Exactly. Let me
find that.
Go ahead, Peter.
I find that comical because you've got the largest employer now in China putting out safety nets because they've had a rash of suicides over the last year to catch people jumping off their buildings because of their horrific working conditions. And Bernie, you could double the wages in China and you still wouldn't have anything near what the wages are in other competing countries. And the fact of the matter is it's basically slave labor over there by any other name. And I've heard these arguments for years now. The bottom line, and Ian's absolutely right, this state capitalism is killing free markets and free trade in the Western economies. But the point that Ian needs to also make is that China is the biggest country doing that, and they cheat. They're the biggest protectionists, the biggest mercantilists. Canada, the U.S., and Europe don't have a chance against that.
Okay,
well,
Bernie.
In terms of mercantilism and in terms of protectionism, there are no angels on the globe. There are only devils. everybody does
worst,
it.
Bernie. I think that's
well,
the point.
yeah,
they
well,
are the worst.
yeah, but you also have to look
Do you
at.
disagree with that? And in terms of large economies, China is the worst mercantilist and protectionist.
Well, you also have to look at, how long they've been in sort of the capitalist game. And the stage of development.
Why?
I don't think it's fair to take a completely industrialized country versus a country that is in fact developing. The other thing that in terms the Chinese are extremely worried about social tension, and so they have to make sure that the wage gap doesn't become too large between areas, between groups of people. There was an item today in the China News Agency about that Honda strike, which talked about decent wages and fruits of labor and all that kind of thing. So I agree that the wages are still very low, the dormitory conditions are abominable, but there is a move upward, and with the move upward, it means that. And the currency is going to go up. It already has gone up vis-a-vis the euro. You're going to find that the Chinese are just not going to be able to make toys and clothing unless they make it further inland.
Okay, let me try this with Ian. And obviously we've seen other examples of countries in history which have tried to go from low-cost manufacturers of fill in the blank here of whatever unflattering word you want to use here to a higher end, higher value kind of economy. South Korea's done it, Japan's done it, Germany's done it. Which countries do you think China is looking to as a model, Ian, that you think they want to pursue?
Well, look, I suppose if anything, they're looking at Singapore, but Singapore's 3.5 million people and China's 1.3 billion. Nobody's ever done what China is trying to do because of scale. Because, you can compare it to Japan, you can compare it to Germany, but it's really not the same. You're talking about 1.3 billion people. This is a global changer. And I think what we need to recognize, look, there are big problems coming here. There are lots of reasons why the West will get increasingly upset. Western people, Western voters, Western corporations with what's happening in China. But let me take my American hat off for a second and try to look at this from the Chinese perspective. We need to recognize that for 30 years now, China led growth over 10% a year in that country, and the average Chinese citizen is happier with their government today, authoritarian system as it is, all the human rights violations, everything else, happier with their government on average than the average American is with the American government today, or German, or Greek, or Japanese,
Ian, how do you know that?
or Great Britain. Well, I think, first of all, I spent a fair amount of time there, and secondly, you also talk to journalists, you talk to average people, you talk to students, you get a sense of what the netizens even are saying online. There's a lot of nationalism. There's no question that there are people that are generally upset about individual issues, the vast majority of which are localized, but the amount of support and patriotism for that growth, for the Beijing Olympics, for the Shanghai Expo going on right now, is extraordinary. And when they see the West saying, we got to industrialize, but now you guys don't get to emit as much, they're saying, wait a second, you have cars, we want cars too.
Okay,
and
on the
so
issue
we need
of
to
cars
recognize
then.
this is a serious issue.
Go ahead, Peter.
Steve, can I comment on that? It's a totally phony issue here. Ian's right, they're happy as clams over there. Why? Because they're sticking it to us. If you look at the last 10 years, when they've been growing at 10%, the U.S. gross domestic product fell from 3.2% a year real GDP in the post-war period up to 1999 to 2.4%. It's a 0.8 difference. That doesn't sound like much, but it's a million jobs a year, 10 million jobs over the decade. Our unemployment, our stagnant wages is basically a mirror image of all the joy that's going on in China. And the big problem, Ian, is that the Communist Party doesn't care a hoot about making money and profits like Western capitalists. All they care about is creating jobs, so they'll do anything they can to do that, including stealing technology, undervaluing their currency, and basically engaging in widespread export subsidies. And it's like the people in Ontario or Toronto or Vancouver who are unemployed now can look across the Pacific Ocean to where to the reason why they're unemployed.
Okay.
And we
Peter,
cannot stand by and just let China do that.
Andrea's got steam coming out of her ears here. Hang on a sec. Go ahead, Andrea.
So I'm going to ask Peter whether he bought his latest iPod or iPad and where that's made. It might have come from that Foxconn factory that he referred to, where there was a slew of suicides. Now the problem
What do you think about that Foxconn factory, Andrea?
Why are the Americans buying the products made in China? I mean, why is Walmart selling cheap stuff? Why do American companies such as government?
China basically, because the government of China allows slave labor and slave labor conditions, so you get people jumping out of windows at the Foxconn factory, and the employer putting up safety nets to prevent the suicides rather than giving them better food and working conditions.
I think you're over.
Hang on. Okay, Andrea.
I think you're oversimplifying the issue here. Absolutely. Right. It's got a myriad of reasons as to why those people jumped or committed suicide. It's not simple reason of wages. In fact, Foxconn's conditions are fairly good. You got Hong Kong journalists going in there and taking reports. But anyway, I wanted to say is this. Yes, Peter's referred to as sticking it to the Americans, but if the American enterprises aren't there to make a buck, they didn't come threatened. Nobody took an AK-47 and went to the States and kidnapped the business people over there. So, you know, GM is doing well. Their Yum brands with Kentucky Fried Chicken is doing extremely well. And
well, if
those
China,
are American.
There I disagree.
Go ahead, Ian.
I think we do need to recognize there is a sea change happening with Western multinationals. Yum Brands is doing well, but if you look at the survey taken by the U.S.-China Chamber of Commerce, came out a few months ago, the average American corporate, when asked anonymously, is saying that they feel like their investment opportunities in China dramatically worse than they felt a year ago, 2 years ago, because they think there isn't a level playing field. And that's why Hillary Clinton, when she went to China last week, this is what she started with, not with currency, but reflecting the concerns of American corporations. We have to recognize that if this continues, and I know you recognize the problems of implementation and execution and enforcement, but if the patterns of China policy continues, we are going to head towards a trade war. I think you're not going to be able to avert it, because American corporates that heretofore have been very supportive of free trade with China are suddenly getting their heads handed to them. And Google may go public, but you have lots of them that are saying it privately, and this situation is not getting any better for them.
Bernie.
Yeah, well, I agree with Peter sorry, I agree with Ian on this, but I'd like to go back to Peter, because I think what Peter said was absolute nonsense.
Which part?
The part that where he blamed blamed the unemployment in the U.S., the low growth in the U.S. on the Chinese, and that one is the counterpart of the other. That's sheer nonsense. In fact, what happened in the United States is that we had actually one of the lowest levels of unemployment for quite a number of years. And we also, in the United States, had one of the lowest rates of inflation. And that's because the Chinese, as Andrea pointed out, the Chinese goods coming in that were very cheap. It has allowed the Americans, in fact, to go up market. So it's just absolute nonsense.
What's that got to do with the unemployment rate, Bernie?
The unemployment rate has nothing. The unemployment rate
had 17 million manufacturing jobs in 2000 down to 11 in 2008. Now those manufacturing jobs went somewhere. Now during that time, China basically became the manufacturing floor of the world. Are you saying that China has nothing to do with the unemployment lines in Michigan or Ontario or the rest of this country? Is that what you're saying?
Just as China needs to move up market, the U.S. needs to move up market in terms of manufacturing.
Hang on
1 second, Peter. Let's get an answer here.
Yeah, manufacturing really, isn't the end all. And there are industries that no longer make any sense for the United States, and that just is a fact.
Let me pick up on that. Ian, take this one on if you would. As China looks to go higher end, what do you believe to be the key industries that they ought to be focusing on in order to be more competitive in the world going forward?
In China or
yes.
the United States?
No, in China.
Well, no, in China, clearly they're going to have to create a social safety net. If they want to get their consumers to start spending, they're going to have to make their consumers believe that they're going to have the capacity to do so, especially as they're moving into the middle class throughout that country. So that means that they're going to have to do things like healthcare properly. It's going to be a massive area of growth. They don't do it well domestically. They're going to have to get it right. They have to get their pension system right. They also have to do an extraordinary move away from all of this, commodities intensive, very high emissions, heavy industry, because they are destroying their environment in a way that is unfathomable, even to what happened in Japan after World War II. And frankly, they're not going to be able to move that way very quickly. So long term, you know, the unsustainability of a lot of what China is doing is the biggest concern here. It's one thing for a near-term U.S.-China trade war. It's another thing if a country that we are as dependent on, as interreliant on as China, suddenly can't keep going. And long term, that's actually the bigger problem.
Andrea, tell me this though. Can China compete with German auto manufacturers on making a great car? Can they compete with, you know, the Japanese on making very high-end consumer goods and technical equipment and that kind of thing?
Probably not at the moment, but Volkswagen has been there for what, like 20 years, and now they're what, 70 or 80 car makers in China. So you might be looking at in India with a $3,000 car type situation here. But I wanted to address Ian's point, is that I think the Chinese government recognizes that in that April announcement. They actually want to encourage more eco-friendly and greener industry. So those are the type of investments that the Chinese would love to welcome to the country, except of course Peter's going to say that they will try to steal the foreign technology and the know-how.
Before you come in on that, Peter, let me actually read you something that Michael Wines wrote in the New York Times on China's state-driven economic model, and you can pull out the appropriate analogies to a police state or however else you want to answer the question. Here we go. Yet, as outsiders behold China's transformation from peasant nation to economic colossus, the risks of extrapolating from China's robust present into an indeterminate future are not to be ignored. China's rise is doubtless an economic miracle, but like Japan's, China's state-driven economic model may prove more useful in earlier stages of development than in guaranteeing sustained growth well into the future. I want to know, Peter, whether you think China's political model can sustain the kind of economic growth they want and need to have long term.
Well, if they can keep creating jobs by stealing our technology, sure. I mean, the thing that's so interesting about this Chinese problem here is, like, in Massachusetts, there's a company called Evergreen Solar that basically manufactures solar equipment. It was forced by Chinese mercantilist policies to move its production facilities over to China. Now, the corporation itself will make a lot of money for its shareholders once it does that, but it leaves the jobs behind. And one of the points I think it's important to make, Steve, is that when American or Canadian corporations go over to China, they may do very well, but they're not employing Canadians or Americans. That's out of the equation. So you know, it's a really big issue here that we're not addressing. So I don't know what the future will bring, but I do know that they've already moved up the value chain. Steve, you know this? That they are the largest producer of cars in the world right now.
Say that again, the what?
Already. They're the largest producers of passenger automobiles in the world already.
Well, hey, Ian, let me put this to you. Let me put this to you because you talked about the future there, Peter. Let me talk about the present for a second. Of the 22 Chinese corporations listed on the Fortune Global 500, of 22, 21 are controlled by the central government, and one, Shanghai Automobile, is run by a local government. Not a single one, Ian, is privately owned. Now, is that sustainable going forward?
Well, it's sustainable for a while, and it's much more sustainable because of what's happened in the global economy over the last 18 months, because the free market model has taken such a hit, and the Chinese government is certainly smart enough to recognize that and use that to justify their own system to their own people, and I think that's worked very well. But what we do need to recognize, and I agree with the point that was made before, the United States, the Canadians, the developed states do need to continue to move up the value chain themselves. It's not going to make much sense for Americans to manufacture automobiles in 10 and 20 years in the United States. But if you think about the game changer in global energy over the last year, unconventional gas, shale gas technology, overwhelmingly developed by American corporations in the United States. Why? Because they're largest, because they have real research and development capacity and spend much more money than the Chinese do, and because there's rule of law, because you're going to maintain that intellectual property. Long term, the next big things that are coming in the next 10 to 20 years, most of them will still be in the developed economies because of those factors. So we need to recognize that. We just can't hold on to the past. And the problem is that politically, it's very hard to disregard the past when you have 17.2% real unemployment and people in Michigan and in Ontario that are hurting because, frankly, they don't have the training, and the jobs that, they used to have just don't make sense from a globalized economy perspective.
Which I guess is why we just spent billions of dollars buying up car companies that you say are going to be obsolete in 10 or 20 years because all the cars are going to be made elsewhere. Oh,
wouldn't have been my choice.
That isn't going to be the case. There will always be some cars manufactured, assembled in North America. It's the fact that we're talking about relative. We're going to see a relative decline here. There are still, the economics of it are still such that it makes sense in certain instances to produce some vehicles. So it's a matter of the amounts. And we are going to clearly see vehicles coming from China into North America, into Europe. There's no question about that. But it is that we're going to see a relatively downsized industry. I mean, there is some, the automobile industry is going to be somewhat different from what it was, but there will still be an auto industry.
Andrea, I want to ask you about how cocky China feels right now, insofar as, of course, capitalist countries, Western countries, have always felt that we've had the better political and financial and economic system compared to the Chinese. And then we went through what we've gone through over the last year and a half, and China's still growing, and China's still got all the money in the bank, and China is now moving higher up the food chain, as it were, on the economic development scale. Do you think they're feeling pretty cocky these days?
Probably, or some would say more assertive, at least.
Assertive,
in 2008.
Okay. That's probably a nicer way to put it, yeah.
In 2008, when the U.S. economic meltdown happened, I mean, Premier Wen was basically saying to the Americans, like, what the heck is happening with your currency? We're the largest holder. And he was openly thinking about whether he should diversify. And of course, move forward 2 years, we got the EU problem here. So what is a free enterprise? Now, I'm in no way defending the Chinese system, and I think ultimately the Chinese government, albeit a authoritarian government, would have to recognize the rule of law or the way the international, or at least the rules work. And they have been a signatory to the WTO, and therefore I think eventually all those areas hopefully would move forward. And these wars that the gentlemen have been talking about, sure, I think there is a real danger of that happening. To some extent, that's already happening with many trade disputes with the EU and the States.
Peter, what do you think the implications, Peter, are of China's, I guess, increasing assertiveness or cockiness, or call it what you will, as a result of what we've undergone over the past year and a half?
Well, I think it's going to lead to more and more conflict. I mean, they're sitting on $2 trillion of U.S. reserves that we borrowed from China, and they're able to use that now as leverage against our foreign policy. For example, they backed us down on the whole currency reform issue just on the strength of that alone. They're projecting military power in the Pacific, and there's more and more conflict between the U.S. military and China there. They use their power, and this is one of the things that's really at the top of my list of problems with China. They use their power as a permanent member of the UN Security Council basically to trade their veto in exchange for resources. For example, in Iran, they traded that veto power to get to the largest natural gas fields in the world. They've done it in Darfur with the Sudanese. They've done it in Africa. And China is definitely feeling its oats, and it's acting in its own self-interest. And I think sometimes the West, Canada, the U.S., Europeans, kind of don't act that way. They kind of think that we're all in this together and we'll all act civilized, whereas China is much more Machiavellian, much more hardcore, much more 19th century about this. And they're consolidating their position.
Ian, about 2.5 minutes to go here. Let me ask you whether you think China's perspective of itself is rising, given that we have been through so much on this side of the pond with the financial crisis and so on.
It definitely is, but that doesn't mean they're prepared to take a global leadership role. I mean, we need to recognize that if the Americans decide that they get really upset with the U.S. government, they vote them out, new people come in, the Supreme Court's still there. If the Chinese get really upset with what's happening with the government, that government is vulnerable. Their survival's at stake, and they act that way. And so as a consequence, they are very much focused on the top priorities, which is ensuring the economic growth that will make sure that their political survival stays in place. And ultimately, that is forcing them to take some decisions that's putting them directly at loggerheads with the West and with Western corporations. And that's really where we're going to see the confrontation, because you're going to have a lot of Americans and Canadians and Europeans that are more willing to finger point China when they're not doing so well and the Chinese are.
Andrea, the title of Peter Navarro's book is The Coming China Wars. There's not a question mark at the end of that, there's a colon. He seems to think it's a done deal. What do you think?
I'm not surprised. I heard there's a new movie that Hollywood is producing coming out in November in which China is going to wage war on the U.S., and that's already a mini war. But to answer your question, I think is the result of a new brand of nationalism and their newfound economic power and might on the world stage. So sure, yeah, absolutely, the two superpowers.
Peter, I'll give you the last 30 seconds to respond to that.
Well, I think the China wars are actually here right now. It's a battle for markets. It's a battle for technology. It's a battle for raw materials. It's a battle ultimately for jobs and wealth. And we've seen the power shift to China as income levels have been stagnant in Europe and North America, and there's high unemployment. Well, China's booming. Say no more.
It's good of all of you to join us, both in the United States and here in our studios in Toronto, for a most interesting discussion about China's future. Peter Navarro, the business professor at UC Irvine, author of The Coming China Wars. Ian Bremmer in New York, the Eurasia Group and the author of The End of the Free Market. Bernie Wolf from the Schulich School of Business at York University. Andrea Chun, the lawyer and commentator. Good to have all of you on tonight's program.